time in the market is certainly more important than timing the market.
A lot of transformation in commercial real estate, in retail real estate, in resi real estate.
If you have invested in good real estate, you will obviously get the best of clients always.
Equity and gold will continue to be an important theme.
We invest today because tomorrow the prices are going to go up. It's ROE.
Well, actually, ROE is a complicated concept.
And hands up, return of ego. Gafoor!
Hello and a very warm welcome. I'm Aashreen Puri and you're watching Ep.3, an exclusive podcast series by Anarock. In this series, we talk about Indian real estate insights, trends, and what's new in the market. Today, I'm joined by Bappaditya Basu, our Chief Business Officer for Commercial and Retail Strata, and Amit Pande, Managing Director of Investment Banking. We will be discussing in today's episode different and various ways to invest in commercial, retail, land, hospitality, REITs, and AIFs to expand your Indian real estate portfolio. Hi Bappa, and Amit, welcome to Ep.3. So Bappa, let's begin with you. We've seen a lot of transformation in commercial real estate, in retail real estate, in resi real estate. How has the mindset of the investor changed in terms of looking at commercial or retail for investment purposes?
Hi Aashreen. In the last couple of years, the residential real estate has taken up a huge amount of space, and we see a huge amount of oversupply that's coming up in residential real estate. Most of the investors right now is looking to put money into commercial and retail real estate, where the yields are at least 3 to 4 times higher than the residential real estate.
From an investment banking perspective, what do you think has changed in the last couple of years with regards to institutional investors and private investors?
From an institution and private capital standpoint, we've always seen a huge interest in real estate, either pre or post pandemic. But most certainly what has really changed is that, actually from a side of a private capital, is that investors are trying to chase products which are more financial and liquid at the same time. While obviously we've seen that stability in the asset class is obviously the most important actually constraint. The office as an asset class continues to play an important role. What we've really seen is industrial and actually warehousing obviously continues to being chased by a fair bit of capital, both on the institution and the private capital as well. We've also really seen that hospitality as an asset class has really become very strong and prominent post the pandemic.
So Bappa, you spoke about the yield in residential versus commercial and retail. Is that the only driving factor for investors to invest in commercial properties over residential, or is it also the income stability like rent or many other factors?
No, more than the yield part of it, there is also the escalation of the capital values of the property. If you see the last couple of years, the capital value of most of the commercial real estate, in fact, the properties that you see in BKC or in Andheri, the capital value has at least gone 1.5 times in the last 2-3 years. That's another reason that people are able to negotiate at a much more better rental yield in the property. 2 years ago, the yield in a property like in BKC would be roughly around 7 to 8%. Today, I would be getting on my capital invested roughly around 12 to 14% of yield.
And what kind of ticket size would be an entry ticket size for somebody to pick up as an investor in commercial or retail?
Pre-COVID, most of the developers used to only sell floor plates, but right now with many developers coming up with small strata sales offices, you could go as low as 1.5 crores to 2 crores of ticket size that you can enter. That means that you can buy an office or a commercial space for as small as 500 square feet of carpet area to as high as entire plate, which can be varying from 10,000 to 30,000 square feet of area in most of the places in NCR, MMR and Pune.
What I'm understanding from you is that it is better to invest in commercial or retail as an investor rather than residential. But today, whenever we hear anybody who's wanting to expand their real estate portfolio, majority times it is expanding in residential. Is there a particular reason why that mindset hasn't shifted yet?
No, Aashreen, residential is an emotional buy. The first time any investor want to obviously invest in a residential real estate because that's the place that he want to stay. Once he secured his makan, then he looks at what to do with the next kind of money that I get as investment. Hence, he thinks of going to a second investment. If they go ahead and think and they understand the mathematics that probably getting a 1.5% return or 2% return of a residential versus if I'm getting a 6 to 8% return into a commercial or a retail real estate, he will obviously want to buy. People don't get that kind of ideas or probably that kind of data where to do that. Once they come to us, we probably explain to them these are the benefits of entering into a commercial real estate as investment. More and more people are coming and giving their monies to us to invest in commercial real estate.
Understood. There's a lot of talk, that's happening in REITs and AIFs nowadays. Just for the general public, a layman like me, can you explain what a REIT is, what an AIF is, how do you sort of go about it?
Taking an anecdote from what he said at actually some point back, I certainly think that somebody who is looking to acquire office might find it complicated to just go out and identify a right unit. At the same time, that unit at what price it might be available, what kind of rental, lease agreement, vacancy. If you want to have a actually financial way of playing the same strategy, playing the same theme, that's where REIT would come in. REIT obviously is an aggregation of office asset class or actually any kind of yielding asset class in India. It can be office or actually retail or hospitality as well. And if investors are seeking to play these themes actually via the actually financial market where they want to acquire this and continue to earn actually rental income with some amount of capital appreciation, plus having the extra advantage of liquidity, that's where REIT comes in extremely handy. Over a period of last actually 5 year plus, it's actually become an important asset class in clients' portfolios where we see that it's not only just family offices, but actually institutional investors also coming and investing into these kind of themes. And we believe that it'll continue to play out over the next couple of years while India will grow as a economic superpower, where you will see that these office assets will get created, REIT managers will come in, actually manage them, offer India's story to these institutional investors globally. AIFs are actually slightly more illiquid compared to REIT in that sense. AIFs is a great way for investors to come and play a theme in real estate. And it's quite actually transparent, actually well regulated by Indian capital market regulators. So as you would have different strategies in equity mutual funds, you've got to start thinking that AIF as an alternative asset class would have strategies around it.
So would you say that a REIT and an AIF is more rewarding than probably investing in a buyer property? Something sort of Papa is quite vocal about, whether it is investing in commercial or investing in retail as a second-time investor, or would you say that go still invest in direct property and then post that sort of think about investing in REIT, AIF, or even stocks as a
It's not either or. You both can coexist in harmony, and both obviously have their own proposition on value. They have their own proposition on return and liquidity as well. Since equity and stocks and mutual fund can coexist in a portfolio of a client, similarly, direct real estate, AIF and REITs can also coexist and should coexist in a client actually portfolio. You might find it complicated to understand this, but once you should certainly seek help of all third-party professionals like us to go and see this.
When people come to us, we understand which real estate will go up. We go and choose and curate that kind of properties which are in good location, has the correct pricing, has the stability to stay in a longer time in a market, and most importantly, it has a huge amount of capital appreciation over a period of time. We also have the option to buy smaller properties. We help them to lease the property out, and we make sure that you get a yield at least 2 to 3 times higher than the residential real estate. The difference between what Amit is telling is that his yield would be depending on what the AIF has invested. In our case, we make sure that whatever money you invested, the entire money as a yield comes to the investor directly without any cut to an investment manager.
We will encourage investors to play AIFs and use a third-party investment manager to play those themes, because that involves a bit of more structuring in terms of the capital outlay. and those structurings obviously need a third party professional help. Having said that, Indians obviously like to do it themselves, right? That's what historically real.
Small time investors, right? Nowadays it's sending applications, download one on your phone. Also, since gold and silver frequencies are going up, do you see the behavior of the small time investors changing, or you still see that same mindset that I can do it myself, download the application on my phone and try to take a fund on the stock market or try to sort of invest in gold and silver?
We've historically seen investors are conscious on cost, and sometimes cost of a third party provider plays in their mind while they are trying to create all of these portfolio in a do it yourself kind of manner. We will encourage everyone to really think that it makes more sense to hand it over to a third party who's more professional, has the experience of managing this over years. Real estate, gold, silver, all are inflation hedge, and we've really seen all of them moving in tandem with each other. And we've really seen when gold prices have really gone up, real estate has done extremely well. And you're seeing that actually as of now as well. And it makes actually more sense to play all of these themes and hand it over to a third party fund manager as well.
Yeah, I think for Indians, there's something called as a tangible asset is very important to us. People have this attitude to tell that, okay, fine, a dukaan ya probably a office mera khud ka hai. In the case of what Amit is telling, investing into REIT or AIF, that he can't have that kind of attitude when he goes and tells that. Yeah, first timer, he would be very happy to tell that a dukaan mera hai or probably this office is mine. So when he wants to do that investment for the first time as whether it's a commercial, retail, warehouse or any hospitality asset, he would want to do that where he can share that, okay, fine.
What are opportunities that come with second-time investors or smaller investors who want to expand their asset portfolio should be looking at investing in whether it's commercial, whether it's retail, and then within the next 5 years, if there's somebody looking to expand more than having their office and having their hotel or having their home or having their retail space, what should they look forward to in the next 5 years?
Pre-COVID, the amount of commercial real estate that was being constructed in India was roughly around 45% of the market. Post-COVID, what happened, or during the COVID, most of the people told that, okay, fine, I should have my own house or probably ownership of a house rather than staying in a rental apartments. That's the reason that the portfolio of the residential developers has gone as high as 85%. And suddenly there is a glut of commercial or retail real estate in the market. If I'm talking of the entire India in the top 10 cities, sales that happens in a real estate is roughly around 6 to 7 lakh crores that happens in a year. And in that, suddenly that most of the developers started feeling that, okay, fine, that commercial or retail real estate has not come up in the last 3-4 years. You have not seen any mall open up in Bombay or probably any new mall opened up in Hyderabad or Bangalore. And suddenly you realize that there is a huge amount of demand for this kind of spaces which was not being made in the last 4 or 5 years. So this is the right time that most of the investors or specifically small investors to come in and start investing in every single development or probably construction phase shopping malls or in commercial office spaces to get the maximum amount of return. And most importantly, at this stage is where the developers are looking to get the funding they are giving at a very good deals, and hence when it's ready you will not get the kind of returns or probably the highest amount of returns when it is ready because of the demand. If you can't find the office space today at BKC or probably you want to go to office space in Gurgaon, it's very hard to find the office space. So now the developer started feeling, okay, fine, enough of construction residential real estate, let me focus on a little bit of commercial or retail real estate, and hence they started developing or probably launching the new project. So my advice to the small investors is, in case wherever you find any chance of getting investment or get your money invested in commercial or retail or warehousing real estate, please go ahead and start investing into them.
Because in the next 5 years, it is obviously going to transform a lot more than what it is right now. More focused on commercial.
Yeah, absolutely. If you really see the picture of actually MMR, and it's been historically a residential market. You've really seen all of these actually pockets of South Bombay. You've seen suburban, and you've seen the North Bombay as well. To our mind, if you really see office was more centered around South Bombay. But over the last 18-20 years, you've really seen all prominent hubs of office coming up in MMR.
When they invest, you think about selling? What is the right time to sell?
If you're getting a yield of 12-15%, I don't think the most of the investors want to sell. Right mantra would be selling when you're getting a yield which is a much more bigger yield than a fixed deposit, or a much more bigger yield than a, even in putting in share market also, where the average yield in a span of 5 years is not more than 10 to 12%. And if you're getting a yield of 16 to 18%, and which keeps on getting appreciating every 2 years, 3 years in terms of rental appreciation, I don't find a reason why people would sell. But in case you need a money, in case you suddenly need of money or something like that, I think that at least minimum holding for 3 years, where you get a escalation of your rental after 3 years to a 15%, so automatically you get a 15% capital appreciation on your yielding value to a other investor that you're selling. Secondly is that at most of the cases, when you invest at a very early stages in the development, and by the time the OC has reached and the capital value has escalated to at least double, that is another time where people would think, okay, fine, I made all the money that I wanted, and whatever money I have invested, it has doubled. It is right time to sell it and give to some other investor to get the yield per month rather than the capital value appreciation.
Actually, for REITs, two parts of the equation are there while you're taking exposure or investment. One is actually appreciation of capital, and the other is regular income by way of payouts. I think in the current context, you can continue to take exposure on REITs, because in India, as long as your combined total return in terms of capital appreciation and the payout is higher than actually expected inflation, you should continue to hold on.
We've seen that during the pandemic, a lot of wealth was created through investing in stocks. What is next in terms of creating wealth? And what should people look out to sort of invest in within real estate? And my second question would be for an aspiring investor. Where do you advise them to deploy the capital that they have?
What you have to understand, Aashreen, is that real estate is an asset class in itself. So in terms of themes to chase for, I certainly believe that office continues to be a strong investment themes in years to come. Residential will continue to play an important theme. We also think that industrial actually warehousing, where you see the consumption theme being played in that. Broadly, India is quite set in terms of its story on the business in terms of real estate. Then I think these three asset classes should be a part of the client's portfolio.
The portfolio of any investors, or probably any individual, 55% is into real estate. Very minuscule part of it is in gold or mutual funds. During COVID, what happened is the stock market plumbed down at a very lower level, and that's the time when most of these savvy investors put money into stock market, which obviously after 2-3 years, because it gained back, and that's the reason that they made money. And when they made money, took out the money and put into real estate. If you see all today, all the luxury houses that have been sold in South Bombay or even in parts of Gurgaon Golf Course Road are all people who made money out of in the stock market, and then they put the money into real estate, because in a longer term, as an investor, they know that okay, fine, there is a volatility in the stock market, but in real estate it will keep on having the appreciation. It will probably not go up at certain points, but it will not fall down, unlike stock market.
There is a certain element of preservation of capital.
Okay, great. I think that was a fun conversation to understand what aspiring investors should do, small-time investors should do, second-time investors should do, or institutional or larger family investors should do. I think I have learned a lot from the conversation, and I'm quite glad that we picked this topic for the audience, because there's so much to understand. Information in the market is not really very clear on how to sort of divert your capital, whether it is in that properties or whether it is in REITs or IIFs. We have a little bit of a rapid fire for all. We'll start with you, Amit.
I'm happy to be in the hot seat.
One investment rule you never break.
One investment rule I would not break is to be impatient on the investment call which you've actually taken, because in some sense you have to allow your strategy to play out with time. Sometimes it might happen that you might take a call actually based on certain convictions, and those convictions do play out over the long term.
REITs or AIFs?
REITs.
One routine mistake most investors make in real estate.
They buy on the recommendation of their financial advisor or family friends. I think I will certainly ask them to do their own homework before acquiring anything.
Most underrated asset class in India right now.
It should be industrial and actually warehousing.
If not real estate, where would you invest today? Gold, equities, or ETFs?
If I were to take some exposure at this point of time, has to be a combination of equity and gold.
Not crypto?
Crypto, obviously, yes. But I think from a Indian regulation standpoint, still it's not comprehensive enough actually for investors to take exposure in crypto. But I certainly actually believe that equity and gold will continue to be an important theme.
What's
investors would like to assume timing the market, but I think time in the market is certainly more important than timing the market. It can happen that the timing can be wrong, but as I said some time back, if your convictions are right and your fundamentals are in place, time spent in the market will actually make sure that you will actually achieve your desired IRR.
I think it can be a mix of both. Like it's timing in the market and I stay for a long time in the market.
Well, Papa is always right on actually timing the market or timing the investments for sure, but it's hard to time the market.
One financial term that is always misused by people.
All the financial terms are misused by people. If you ask me, if I have my way, I would make financial planning actually mandatory in schools as well. That's the way I think about it. The most important element in a lifespan of a human being, that if you can plan your actually finances well. If I have to dig harder in my mind, one financial term where people most abuse is
I will tell it's ROE.
well, actually, ROE is a complicated concept.
And then I'm talking of return of ego.
Well, I'm talking about return on equity right now. One term which is most misused is yield. If you can understand the matrix of inflation and yield, you will do extremely well in your investment portfolio.
One sentence of advice that you would give to somebody who's starting their investment journey today.
Plan your spending well. Don't benchmark yourself of investing whatever is left after spending. It should be the other way around, that you should plan how much to invest and spend how much is actually available after that. Thank you so much as well.
Back to you when you're doing a round for both. Anyway, Bappa, commercial or resi? Your personal favorite.
Commercial, always commercial.
He's been biased now.
One city you think India's next commercial hotspot will be in?
Pune,
A retail brand that you think will always get you the state right?
Zara,
What excites you more? Mega deals or closing and spotting a new trend in the market?
mega deals obviously, because that gives you a lot of exposure to bigger people to deal with, for foreign investors to deal with.
If you have 1 crore today in your pocket, where would you invest?
Mumbai,
What is one deal that has taught you the most in your career?
probably all the land deals that I do. I realize that every different state in this country has a different rules for land. And when I start doing the land deals, whether it's doing in Lucknow or doing a deal in, say, Bombay, or doing a deal in Goa, every different state has a different rules, and I have to understand the rules very nicely. So the biggest deal that I had done one at Goa, which helped me to understand the Portuguese law rather than the Indian laws.
What is one biggest myth that you have heard about investing in commercial real estate?
It's very hard to find clients once you get the office space. Actually, if you invest in the right real estate, it's always very easy to get a client. You just don't go into the FOMO feeling that not getting the right clients. People will come and give you the pressure and keep you the FOMO feeling. Stop having the FOMO feeling. If you have invested in good real estate, you will always obviously get the best of clients always.
One advice that you have to give a new investor entering in commercial or retail Strata, what would it be?
It would be invest today, because tomorrow the prices are going to go up.
The last segment is for both of you. If real estate were a person, what would the personality be?
You want to say Anush Puri?
He's Amitabh Bachchan of real estate.
He's the Amitabh Bachchan of real estate, right?
One word to describe India's real estate investment climate right now.
Gold has stopped rising. You are not sure about the stock market. Invest only in real estate.
I was thinking of a song which I heard in a Netflix series called Kafoor. So it's sizzling hot right now.
Can you sing the song?
Kafoor!
Gafoor!
Coffee or chai during negotiation deals?
Has to be coffee for me.
It's a coffee for me.
What city would you love to own as your landmark property today?
Bye.
Mumbai,
Any day.
Mumbai any day. It's like 40% of Indian real estate.
Okay, great. Thank you very much for being on the public. There is a lot that we've learned today. I was lucky to have you here, and we'll see you guys soon.
Thank you, Aashreen, for
Thanks
giving
for
us.
having us here as well. It was wonderful to have a chat.